Hi everyone, Sabelo speaking here. So in this video, I'll be doing two things. Number one, I'll be breaking down my strategy. So I'm going to give you just an overview or an overall of my strategy. What is it that I'm looking for before I take a trade? And then number two, I'm gonna be sharing my trades that I was taking last week. Then I'll be showing also the outcome of the trades that I was looking at in the last week. So let's start by breaking down my strategy. Okay, so the number one thing that I'm looking for whenever I start trading is I look at the market structure from the higher time frame. So I look at the market structure from the weekly time frame, followed by the daily time frame and the H4. So I look at the key levels whereby the market reverses. Then I mark that some other people they call it support and resistance. Some they call it key levels or key zones. So those are the things that I look at whenever I start trading. I start by doing a top-down analysis, marking the key levels, and then after that, I jump into the lower time frame, which in this case, in most cases, I use the H1 to calculate or to mark the round numbers. So when marking the round numbers, I'm interested in looking at the numbers like this, the numbers that ends with triple zeros. Okay, so after that, I also go up and look for another number that ends with triple zeros, and then I calculate the distance from this number to this number. So if the distance or the difference is 100 pips, then that's my round numbers. Okay, and then I also jump into my H1 again and look at the midweek reversal zone, or the highs and lows of the week, not of the day, but of the week, because I'm a swing trader. I like to analyze the market from the high time frame so that whenever I enter, I'll be able to hold my trade for like 2 days, 3 days, sometimes 5 days. It depends on the volatility of the market. Then before I take a trade, I make sure that I zoom in to the lower time frame, which in this case is going to be the 15-minute time frame, to do what? To look at the M's and W's. So M's and W's are just a well-known concept, but me personally, I use this one to catch the entries that I was, whenever I start analyze, I start on the high time frame, followed by round numbers, and then midweek reversal. Then for entries, I use the M's and W's, something like this. For this is an example of an M, and then this is an example of a W. So this is appearing on the 15-minute time frame specifically, because that's when I enter my trade. Then I also look at the index or the correlation of each and every currency that I'm trading. For example, let's say I'm looking at US dollar versus the Japanese yen. Then I'll be looking at the whole USD pairs like USD CAD, USD JPY, USD Euro, USD Pound, something like that. So there is a platform that I came across that tells me exactly what I'm looking for. For example, here, here I was looking at the index of the US dollar. Obviously, this is not normal because you'll never see something like US dollar on the left hand side and then euro on the right hand side. So in real life or in the real market, you'll never see something like this. But me, because sometimes as a trader, you need to be unique, so that you'll be able to analyze the market in an easiest way and analyze the market in such a way that you'll be able to make profit and avoid taking unnecessary losses. So this platform is assisting me a lot when it comes to catching the entries, and sometimes it helps me to avoid trading the pairs that are going to kill me or to go against me. So as you can see here, it says US dollar versus euro, US dollar versus pound, US dollar Swiss, US dollar Canadian dollar, US dollar Australian dollar, US dollar NZD, US dollar JPY. So here I was looking at the whole US dollar um, index, and I was interested in the direction, a temporal direction, or let me rather say a current direction of the market, because this is the M15 that when I enter, then I look at the current candlesticks. If most of them are bullish, that means if I'm looking for a sell, then I must wait a little bit longer because most of the candlesticks are still bullish. But if most of them are selling, for example, in this case, these ones were selling, then let's assume all of them are moving slightly to the downside, then I know for sure that if I'm looking at a particular currency pair that I'm interested in selling, there is a high chance that the market is going to respect my setup. So yeah, so that's it about the correlation. So now I'll be going to a particular currency pair to analyze the market using the exact information that I was telling you about. Remember, I look at the market structure on the high time frame, then I look at the round numbers, then I look at the three pushes that is happening on the H1, which is also creates a midweek reversal or a high or a low of a particular week. Then I also go down to the 15-minute time frame to enter my trades using M's and W's patterns. Then for correlation, I use it for also entries, to avoid unnecessary losses and to make sure if the trade is going to go against, into my favor, then I use this platform to give me the numbers that are telling me that yes, for sure, I'm going to win on this one. So I'm going to choose a currency pair that I think it has, a nice, okay, let me just go to CAD. Okay, CHF JPY. I think this is the trade that I was hoping to analyze in front of you guys. All right. So as you can see, all of the markups are there, but I will just remove everything so that I will start from scratch. And obviously, I always start on the weekly time frame. So on the weekly time frame, what I'm gonna be doing, I'm gonna be marking my key levels. Okay, I am going to be marking my key levels. I look at the recent data because we are on the high time frame, which is the weekly. So I'm gonna be focusing on what I see on the screen. So let's start from here. This is the low, this is the high, this is the low, this is the high, this is the low, and this is the high. So by just doing this, I know for sure that I'm done on the weekly time frame. So now I will be jumping to the daily time frame. Okay, let's go to the daily and let's remove this. So on the daily time frame, I'll still be focusing on the recent data. I focus on what I see on the screen. I don't scroll back like this. I look at the recent data. I look at the recent data. Okay, we are going to highlight this. There is a touch here, there is a touch here, there is a touch, there is a touch, there is a touch. So this key level is so important because it has multiple touches, multiple touches, multiple touches. So that key level is so important, and we see this one, this high here. I can see that the market, while the market was going down, oh sorry about that, when the market was going down and then the market reverses and it left at this key level and then went down, key level went down, key level and then went down. So the market here, it was making a ranging phase. So now we are done analyzing key levels on the daily time frame. So what I'm going to do is I'm going to jump into the H4. Still, I'll be analyzing the key levels. So let's remove this a bit. So on the H4, guys, all the key levels are marked because these key levels that you see were marked from the daily time frame. So there's nothing much that you're gonna mark on the H4 because everything is marked. So now let's go back into our checklist. Sorry about that. Okay, let's remove all of this because it's so messy. Okay, so step number 2, we need to come here. We need to look at this. We need to look at the round numbers, and the difference must be 100 pips. Okay, so let's go back into our CHF JPY, and remember we look at these round numbers where on the H1. Sometimes I look at the H4 if I see a clear picture. So let's use this line. So I'm breaking down everything that I do whenever I analyze. So remember, we are looking for numbers that ends with triple zeros like this. Okay. Okay, I see this, and we are going to adjust it. I see this 120,000. So after that, we are going to use which tool? This one. We want to see the market moving from this number until it reaches 100 pips. Okay, that's our 100 pips, as you can see here. 100. Okay, so now this confirms that there is a round number somewhere around in this zone here. So our round number is 121, triple zeros. So let's put this line here and adjust it, put triple zeros. And obviously we are going to use this tool to guide us. Okay, now it's going to be 19. This one is on point, and you can even go down much further. You can go to 118 triple zeros, 118 triple zeros. Okay, I think there is no need to go down here because the market is not there. We are going to just mark the round numbers that are closer to the current price. So Let's go back because now we are done with our round numbers. Let's go back to our checklist. Checklist. Okay. Now we need to look at this. 3 pushes on the H1. We need to look at 3 pushes on the H1. Those 3 pushes, they give us a midweek reversal in most cases. Sometimes gives us an early midweek reversal, which is the same thing as highs and lows of the week. Yeah, so let's go back into our charts. CHF JPY. This is what I do whenever I start trading. This is what I do. So I'll be sharing everything that I do whenever I trade. And then let's go down into the H1. Remember, I've said this. This is I do analyze from the H1 on the H1 time frame. So now what I do in most cases, I look at the day separations. Okay, I want to see Monday, Tuesday, Wednesday, Thursday, and Friday being separated. Because if you look at this, you can specify the days here. So I'm going to come here to this setting, and then I'm gonna click session breaks. This session breaks is going to give me the lines that are telling me each and every day. So as the market is closed today, this was Friday, meaning that if we count back, this is going to be our Thursday, Wednesday, Tuesday, Monday. So this was our Monday here. This was the move of the Monday. The market went down on Monday, then it consolidated on Tuesday. Wednesday it went up. Okay, Wednesday it went up. So if we want to analyze, because I took the trade here for a buy, and then I lost because there was a huge volume coming from the JPY, and then the market came back again. It created another setup, and then I took a buy here. Then we need to go back to analyze those 3 pushes. Okay, those 3 pushes. So this was Monday, meaning this was Friday, Thursday, Wednesday. Okay, Friday, Thursday, Wednesday, Tuesday, Monday. This was another Monday. So we are going to start looking at the market on this Monday here. This is our Monday, and this is our Monday again. So after this, we're gonna see Monday tomorrow because today is Sunday. So okay, let's remove all of this. Let's remove all of this. Okay, this is our Monday. Let's just mark it with this line. This is our Monday here. So we need to see what? We need to see pushes that are coming down, 3 consecutive pushes that are coming down into a particular key level or particular round number. Then we're gonna try to combine the whole analysis from the weekly time frame, daily, H4. Then we're gonna look at the round numbers on the or the round numbers that we see, and then we're gonna be looking potential reversal, because I trade reversal. Midweek reversal specifically. So the market went up from Monday, it went down, and then decided to went up on Tuesday. Okay, we don't see a downward push. So but here the market started to go down, and it also broken the low of the previous day. So we had a first push from here to here, then we had a reversal, and then the market decided to go down, but it didn't break this low. So we don't call this as another push. So far we have only one push. And then the market consolidated, and then broken. Boom, we had what? A second push. And then followed by a reversal. And then market went down, broken this low, boom. So now we have three consecutive pushes pushing to the same direction, meaning that the market now is getting exhausted. The market eventually is going to reverse. Okay, that's where the concept of mid-week reversal came from. The market normally moves from Monday, goes down, Monday goes down, Tuesday goes down, Wednesday, and then in the middle of the day on Wednesday, there is a potential of a reversal. Okay, same thing when the market goes up, up, and then down. Okay, so here I was looking for a particular round number, which is this one, that was lining up with these three pushes, or a particular support. Okay, and then I was hoping that the market is going to shift direction to the upside. Okay, if we can just zoom out just a little. So the market was respecting what? This support. This support. So the market was consolidating, obviously, we know, but our consolidation was over extended when the market was here. So I was expecting to see a push to the upside. Obviously, I bought because I'll be going over all of the trades that I was taking last week, and you'll see the CA, the CHF JPY, and this trade was also shared in this free Telegram channel here. All of these trades were shared for free. If you want to be added into this free Telegram channel, there's going to be a link below. You can just click the link and join for free. It's just free. You enjoy free signals. Whenever I decide to share signals, you'll be able to see them, and it's up to you that you want to take them or not take them. Okay, let's proceed. So the market was overextended here. It made a first push, a second push, a third push. Then remember my checklist. Whenever we decide to enter, we must look for what? M's for sell and W's for buy. So we go down to the M15. We go down to the M15. Then sorry about that. Then after that, I was looking at this zone to buy the market to the upside. So I had this push and this followed by this push. And remember, here the market was oversold in this day. Remember, the day started here, made a consolidation, and then London session came here, and then the market went down aggressively, and then here the market was forming to push to the upside for what? For New York session. Remember, whenever you see a big impulsive move in the London session, you must expect a reversal in the New York session. Okay, because the market moves in waves, so it is very rare to see the London session pushing down and then followed by a New York session breaking to the downside as well. So if you see a push on the London, expect a push back up in the New York session. Okay, but also we combine everything with we combine our analysis with correlation, everything, round numbers, key zones, So when the market was here, I was expecting to see the market push to the upside, but I missed the trade. I saw the market when the market was here. I saw this when the market was here. Then I waited for another push to the downside like this, and then I entered here on the following day for a buy. but the JPY was so aggressive, was pushing to the upside, and then it spiked me up and then came back up. And then I use another method to enter. Okay, let's just clean our charts. Okay, I use what we call head and shoulder pattern, which I'm going to show you right now. Head and shoulder pattern. So this was an inverse head and shoulder pattern. So I saw the market making a first shoulder, and then a push, and then a head, and then a push, and then a right shoulder, and then I was expecting to see the market going to the upside. Okay, so I took my entry somewhere around here. My stop loss was here because I knew that the market came to respect what? Came to respect our support zone, and this support zone was also lining up with this number, which is a round number 119,000, and then below we had a support. We had a support, a very strong support. The market came here, tapped into a support, and then went up, and then there was a confirmation with our head and shoulder pattern. So this trade went well into our favor. Obviously, my first take profit was in this round number here. My second take profit is here below this resistance zone. So obviously I'm still holding for the market to come here and hit my second take profit. But on this one, I was using another broker to hold this trade. But on my other broker, all my trades are closed. So I hope you saw how I do my top down analysis, how I mark my round numbers, how I mark my pushes that are creating mid-week reversals, and how I take my trades. Remember, if we see pushes like this, you must expect a drop. But if you see a push like this, you must expect a push to the upside. So we combine these pushes with our round numbers, key zones, and M's and W's. Sometimes we use head and shoulder patterns for entries, as you can see here. Here we started by having a W pattern, but it didn't work out. And then the market afterwards it created what? A head and shoulder pattern, and then the head and shoulder pattern worked. But also we also combine the correlation, which I'm not going to talk about in this video a lot, but if you can just remember what I've just said about our entries using the correlation. We look at the shift from a particular currency pair that we are trading. We look at the Swiss and we look at the JPY. Let's just look. Maybe I can't remember that I posted a correlation of Swiss here or not. But let's go back. Maybe I did post it. Correlation of Swiss JPY for a buy. Swiss JPY. Okay, I posted this trade. As you can see, it was Swiss JPY. Here I missed the trade. And then I waited for another entry. So this is the trade that I was breaking down in front of you, the Swiss JPY. But I'm not sure if... Okay, I posted the correlation of JPY. So here I was not convinced that the market is going to respect my setup, because the JPY, as you can see, it was going up aggressively. Up, 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 up. So for us to win in this trade, for us to win on Swiss versus JPY, we needed to see the JPY index pushing to the downside. Okay, so um, but the trade ended up winning, even though our correlation was not lining up with us. But it was lining up with us on the 15-minute time frame. This is on the H4, as you can see here. So yeah, I think guys, you have an idea of what is it that I look for whenever I start trading. Although it's not just an easy concept that you can implement in just 2 minutes. It takes time to understand why I'm doing this, why I'm doing this, why I'm doing that. That's why even to me it took a long time to compile the strategy together, because this information came from different strategies that I was learning from different mentors, obviously. So even to you, if you are watching this video right now, you can start by analyzing by yourself. But if you are struggling to understand everything that I was telling you about, you can just click the link below and start looking at my setup that I give out for free. Maybe if you want to take a course, an advanced course that I provide, which is here, you can even um, come and take the course. Come and take the course, which is 57 videos. You'll find 57 videos in this course. I start from scratch, telling you what to look for whenever you start opening a chart, and then until we take our profit. And there's a lot in this course, but I'm not trying to sell you a course. Just You can just do it by yourself. If you are struggling, or if you need someone to help you, then you can come and join us, because we are making money out of this strategy. And in this free Telegram channel, I even showed all the setup that I was looking at. And as you can see, I won almost all the trades. I won like I'm not sure, but I only lost two trades, and then the rest was in profit. This video is still downloading. This video here, I lost only two trades. So yeah, so let's go back now. As I was saying, that I will be doing two things. The first thing I said, I'll be breaking down my strategy. Number two, I'll be showing you the trades that I was taking last week, and I'll be showing the results that came after. So the trades were shared in the free Telegram channel that I was telling you about, which is this one. So, and the results were shared here in front of you if you were in this group. So I started by giving out the signal for EuroCAD for a sell, and this was the screenshot of my analysis. And let's go to EuroCAD, EuroCAD, EuroCAD. Let's go to the H1. So EuroCAD, as you can see guys, it went down into our favor, and we were able to take how many pips? I'm not quite sure. 286 pips in this trade alone. Obviously, I didn't catch all this move. I closed my profit here, and then I left it with a little bit of position. Then obviously my stop loss was sitting at break even by that time, and then I saw the market coming to close to my entry point, and then to my TP. Then I closed manually, because sometimes I'm not patient enough to wait until the market hit my TP. Then maybe I need to work out on that, because sometimes I leave a lot of money on the table. But obviously, each and every week I make sure that I get something from the market, because our strategies, they give us a lot of opportunities to trade, and we also get a huge risk ratio, which is like 4 to 1, 5 to 1, sometimes 3 to 1. And then the winning rate is insane, guys. The winning rate is insane. That's why I will never change the strategy. Instead of changing it, I will try to improve it in such a way that I will never lose money using the strategy. But so far, the strategy is not 100% accurate. It's fluctuating between 80% winning rate to 95%. It depends on the weeks. Sometimes I get like 100% winning rate, sometimes I get like 70% winning rate, sometimes I get 65% winning rate. It depends on the setups, it depends on the market structure, and sometimes it depends on my emotions, because sometimes I close my trade too early and then I leave a lot of money on the table. Okay, let's proceed. And the second trade was Euro AUD for a sell. This trade was similar to the EuroCAD. Was similar to the EuroCAD. Let's look at the Euro AUD. AUD. Yes, the market went down. Obviously, I didn't wait for the market to hit my stop, my TP. I closed somewhere around here. I remember it. I closed somewhere on Friday, and then the market started to consolidate. So, but my TP was supposed to be here in this round number of 1,59000. So let's look for another trade, which is this one, the Swiss JPY, which is the one that I was breaking down for you. Obviously, we won on it. It started by spiking down, stopped me out, and then afterwards it went to my direction. So that's why you'll see that there is a trade that I lost on Swiss JPY. Look at this, $74 loss. Okay, $74 loss. Okay, so okay, let's proceed. Let's proceed. Okay, let's proceed here. Now we're here. CAD JPY for a buy. CAD JPY for a buy. This one I sent at the opening of the London session. At the opening of the London session, early in the morning. CAD JPY for a buy. CAD JPY for a buy. Okay, as you can see, guys, the market went up straight to our TP. This thing is still loading. I'm not sure what's happening because this computer is good, but the entry was somewhere around here in this zone, and then the market went up. It went up. So as you can see, I was expecting a buy, and then the market did what? It went up. It went up. So let's look for another one. This one, it started by spiking up, and then eventually it went down. It went down. So let's look at the market. Euro GBP. Euro GBP. So I started by entering here, and then TP somewhere around here, and then this thing, I lost money. As you can see, I took the entry here, and then this thing went up, and then after going up, it came back again. Then I was able to enter here at the opening of the London session. Although it was a little bit late, but I couldn't enter in the middle of the Asian session because obviously I could have been in my bed on that time, but I entered there, and then obviously all of my trade are closed by now, but I know for sure that there's a possibility of the market coming to this zone, and then I've made something out of it, by the way. Euro NZD, and then the rest of this trade were in profit. Euro NZD, Euro NZD. It went down into my profit. Enter here, look at the ratio, 5.9 R. Risking with $10, you'll be able to make $50. Risking with $100, you'll be able to make $500. But me, obviously, I don't have like a lot of money to risk. I don't have a lot of money. I'm not, I'm not a millionaire. Okay, so let's proceed. Okay, Euro NZD. I even share the correlation, and I give out the explanation with these audios here, with this voice note. Whenever I see something that I need to explain, I do it using this voice note. But probably I'll be starting to do like analysis like this, the video ones. So the losses, these are the losses that I took: Swiss JPY, GBP USD, and then I started to make a little bit of money there, and then the market went into my direction like aggressively, and then I was holding. So this is the trade of GBP that I entered, boom, and then the market went into my direction, and then I also entered the GBP USD because it was Euro GBP and GBP USD. It was a negative correlation. When the other one was buying, the other one was selling. So let's look at the GBP USD. GBP USD. It went up into my direction, although it didn't hit my TP, but the direction was clear. Direction was clear. Then boom, went up. So this one went up. Okay, and then this was the last trade that I was taking, not the one that I was analyzing, but this was the last trade that I was taking, the US dollar Mexican peso. Okay, looking at on the M15. That's when I was looking at my correlation closely, looking at this, the US dollar index. The US dollar index. So I was expecting to see the market dropping here, dropping here, dropping here, so that I would be able to enter here after the spike, and then what? And then the market afterwards, it went down. So this was another trade that I was looking at. I didn't enter this one. This one stopped me out. Afterwards I was sharing profit. I was sharing all the trade that I was holding, all the money, $2,000 over there. I was still holding at that time. I was sharing all the profits, because if I don't have losses, I can't share losses while I don't have them. So I was sharing profit because I was having profit in that week. So maybe next week I'll be having losses, then I'll be sharing losses. Okay. So these are the profits that I generated last week in front of everyone. So this trade, I was telling my student why I'm not entering them. Forex is so easy because it gives us an opportunity to look the whole index, the whole index, the whole index. So you can't just sell here while the market was buying. Market made a reversal here, mid-week reversal. So for people who were buying this one here, they lost money. People who were buying here, they lost money. So, but my students are making money here. This student was making money. He was happy.
Now
He was catching the exact trade that I was
also
giving
took
out.
them
The
GBP in
student
their
from Philippines. Okay. I was sharing. The other guy bought a car over there. Sharing some motivations there. Here are my trades, $4,500. I'm so happy. I've never made so much money like this before. So trading is so easy if you put enough effort into it. I'm out, guys. I'm out.